You know, I've really enjoyed interviewing economists, and I've always been absolutely shocked by their ability to come up with different conclusions to exactly the same data and then make it sound reasonable. And actually, I think they believe it, and so do their membership. And I guess that's the hardest part, is that there's probably a lot of people trying to make career decisions based on this is what's going to play out. And one of the things, you know, there's, well, for instance, right now, when we look at a notice of default chart that's grown enormously, we know that that's converting at 78% of the time to a trustee sale, which is converting 99.5% of the time to an REO. You just look at the NOD and convert 2 quarters away, you can look at the pile and say, this is ridiculous. This is going to cause a giant problem. The numbers, and I don't have these charts with us, but in comparison to anything we've experienced before, the foreclosure numbers of the 80s compared to the volume of sales, the sales dwarfed the foreclosures. It was minuscule even at its worst. And that was one of the charts we saw, 27,000 against 400,000 sales. This time, let's say in Riverside, well, let's go to the 90s. The 90s had twice as many sales in a quarter as we did have foreclosures. This time we have the exact opposite. We have twice as many foreclosures as we have sales, a multiple of 4 times as bad as the 90s.
Well, there's 2 things happening there. One, the 90s, because foreclosures were driven mostly by unemployment, the rate was about half of what it is today in terms of converting a delinquency to an actual foreclosure. The interesting question, and this is a question I struggle with in this market, is although you never got to the percentage of sales that were foreclosure driven in the 90s, it went on for a long, long time. You had about 7 years there where prices were down or flat, and 7 years where you were at about 65% of what was maximum sales activity. So it was a very long period. If you add it all together, and I haven't done it for a while, it actually is still far short of what we're going to experience over this cycle on foreclosures, any way you measure it. But it's not quite as far as short as it might be. So the real question here, to me, is we've had prices come down 40% in a very quick period, or we can argue in some markets 65%, no question about it, from peak to valley. And the question is the market going to clear faster? And that's kind of the dilemma I'm dealing with. And I deal with that also from the public policy perspective. The best solution to me in many ways, although I spend a lot of my time lobbying otherwise, the best solution is letting the market clear. And the market is clearing. I think the point I wanted to make, and I don't know if I made it well, is that the market is clearing. The thing that surprises me right now is how many sales there are. I am stunned by the fact that we're up, and I think you're going to see that more for the next quarter. I'm stunned by the fact we're up so far, and I don't think it's investor sales, by the way. I think it's too hard to get a loan right now. So it's actual principals buying a home, and in part because the prices, 2 things are happening. One, it's almost as cheap to buy as it is to rent. In some instances, it is cheaper.
Absolutely.
You know, and all those homes you showed, clearly cheaper.
That's right.
And those, you know, are sophisticated sales, but it's cheaper. The second thing is you're below replacement costs. The problem the builders are having, we saw it last time too. But you're basically, in some instances, the replacement costs are twice what the actual sales prices are on new property right now. So that's good news in a sense for investors. It tells you that you're probably somewhat closer to the floor, but the real question is this clearance going to actually be a real clearance, or are we seeing something of a false dawn? You know, because part of the danger of the prices dropping is instead of having those 400,000 or 500,000 foreclosures, nothing to do with resets, people just say, I'm not going to do this anymore. The moral, incentive is gone, and people just walk away because that's the rational economic thing to do.
In Grand Junction, Colorado in the 80s, I was in there in about 1985 and made an offer for all of the HUD repos in one shot. When we bought those, they were condos. They were in fourplex form. We bought them for $10,000 a door. We set all those comps, so that made everything worth 10 grand one at a time. The price got down to 8 grand a condo. You had to rent the condo for 200. There was no one that would buy the condo for 8 grand. Their payment would have been $80. And that's how scary the market was. So the price per month sometimes doesn't dictate you're going to have a big rush to buy it if there's fear about the market. And that's, that's one of the things that can be a false indicator. Yes?
I talked to a guy who handled the REO assets for a credit union at the California Mortgage Brokers Association conference a couple weeks ago, and he wondered if we could get him a list of who held the firsts on his loans. That was my initial response. Now, he was on about his fourth martini, chewing on the olives, and so I probed this a little bit. I said, well, with all due respect, it would seem to me that that information would be in your customer files. You took an application, you'd want to know who had the first on the loan, what the loan amount was, and, logical things like that. And he said, no, we don't have that in any of the files. That's why I'm looking to buy the information from you. And I said, it didn't occur to you to find out anything about the first mortgage? He said, no, we did almost no research on the original one. This is right out of his mouth. We did no research on the first mortgage or on the home buyer. We just got an assessment on what the house was worth, and if it was worth a certain amount of money, we wrote the loan. And I wished I had a video camera at that moment, but I don't. And the only reason I'm telling you this long-winded story is that I think you said something very interesting when you started this particular round of questioning, which really gets to the point that this particular foreclosure cycle may never happen again, only because it's a very different foreclosure cycle than anything we've gone through. Every preceding cycle, at least what the historians tell me, because I'm not nearly as old as everybody else up here, what the historians tell me is that every preceding cycle was preceded by an economic downturn. We look at Realty Track, we believe this thing kicked into gear about the first quarter of '06, where it really started to pick up traction. At that point in time, the unemployment rate was at historically low levels. Interest rates were at historically low levels, and Chris would know this better than me, but the economy was growing at, 3-4%, something like that. There was nothing that would indicate that we were about to see the biggest meltdown in housing, well, except for you. And for those of you who read the California crash, you knew this was coming. But what we saw was, and I know everybody would like the market to handle this itself, but we saw capitalism at its worst. We saw individuals who decided they were going to get rich buying a house, or that they just needed a McMansion instead of that 3-bedroom, 2-bath condo or chalet. We saw, no offense to Joel, but we saw realtors kind of saying, well, if I can sell a $500,000 house, why should I sell a $250,000? Same amount of work, and people are going to get qualified for it, so it's not my problem. Mortgage brokers certainly didn't represent the interests of the buyers. The lenders were ignoring their own underwriting standards. Wall Street was funneling money into this ridiculousness, hand over fist, and tools were being used that were never intended to be used the way they were. There is no reason at all that anybody can ever convince me why an average home buyer should have a negative amortization loan on their principal residence. That's like handing a 5-year-old a bazooka and saying, don't hurt yourself. So I mean, for 100 and some odd years, this bizarre system where the buyer really had no representation, nobody had fiduciary responsibility for the buyer's interests, has worked 99% of the time. And it's worked largely because we had good professionals like realtors who protected people's interests. But the wheels all came off at once.